You are watching Market Watch, the brief overview of the key events from the world of finance. Inflation data in Europe is scheduled to be published next Tuesday, and forecasts indicate a possible decline in indicators, which may strengthen expectations of an interest rate cut by the European Central Bank at the end of the month. This week, German inflation data for September became known, which turned out to be below forecasts, 1.8% year-on-year. This is the minimum level since 2021. A decrease in inflation is also observed in France, Italy, and Spain. Markets have already fully priced in expectations of a rate cut in October after ECB President Christine Lagarde said on Monday that current trends would be taken into account at the next meeting. Traders also expect another ECB rate cut in December and are actively selling dollars, believing that inflation is under control at the global level and interest rates in the United States have more potential to decrease. The euro could not stay above $1.12, but remains above $1.11, while the yen and yuan are showing great activity in the foreign exchange markets. Earlier, U.S. bond yields rose slightly after statements by Federal Reserve Chairman Jerome Powell that the Monetary Policy Committee was in no hurry to cut rates. However, this situation may change if the data expected on Tuesday and during the week turn out to be weak. In the United States, the focus will be on the employment index and job openings data for August. If there are signs of weakening, traders will once again start counting on the Federal Reserve to cut the rate by 50 basis points in November. Currently, market forecasts estimate the probability of such a decline at 36%, which is lower than 53% before Powell's comments. Meanwhile, trading activity in Asia was subdued due to the holidays, although given the closure of Chinese markets, investors have somewhat reduced optimism about the recovery of the world's second-largest economy. And now to the crypto market. Bitcoin opened the week with a decline to $63,000. Additional pressure on the price was exerted by the statement of the chairman of the U.S. Federal Reserve, Jerome Powell, about possible rate cuts of the usual 0.25% instead of the more significant 0.5%. Such rhetoric supported the strengthening of the U.S. dollar. If the $63,000 level is overcome, the next support can be found closer to the $60,000 mark. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.